What's going on, guys? Patrick here with Plan Trade Profit. Today we're going to talk about the human factor in the stock market. How is day trading affected by the human factor? How do humans affect the price? Well, obviously you'll understand it in this video in how you can trade against the human factor. So you're wondering, what am I talking about? What's the human factor? How does the human factor affect stocks? Well, obviously, if humans are being dumb, if humans are being smart, depends. It's going to affect the stock. If everybody's being really greedy on a stock that has a lot of news, it's really running up higher, that's going to cause a short squeeze. There's all kinds of things that happen with the human factor being, depending on human emotions, they're going to affect the stock price. Another thing that I like to play looking for is, where would possible stops be at? If I was trading this stock, if I was long here on GNC, where would my stop be? Okay, so I'm thinking, I get in here at this $10 area. Maybe I get in here for the break of $10. It runs up to 1065. It starts to pull back. And I'm thinking, okay, where is my stop going to be from there? So the guy who got in here at $10, maybe he moves his stock up to the 1020 area, maybe 1015, maybe 1010 to protect his small profit, kind of get out for a little bit of a gain. Everybody starts to put their stop losses in there, and then you get this sell-off. It starts to sell off. And here, obviously, there was a lot of selling going on. A lot of people had their stop losses there at the 1015 area. So the 1015 area was kind of the low of this candle. So everybody who got in this area, they might have put their stop losses at that 1015 there. You get this big sell-off. It crashes, hits $10. $10 would be obvious stop loss. People put their stops there, thinking if this goes back below $10, I'm going to get out. You get a lot of people selling there. It crashes down here to 970. Also, during that time, the VWAP was at that point. So a lot of people were watching that VWAP. They're watching these moving averages. You get this pullback. It was right there. It was bouncing off that moving average. We were thinking it was going to bounce there at the 1015, 1010 area, and then it starts to crash. Everyone starts selling in a panic there. You get this panic sell-off, and you get a big crash down here at the 970 area. So easy profit there. Easy to go short here and kind of look for that break there, knowing that, okay, if this breaks through the EMA there, if this breaks through the VWAP, we're going to get some selling, we're going to get some stop losses that are in that area, that $10 area. Obviously, 990 people who got in there maybe for break even, put their stop loss there. And you can see what happens. You get this big sell-off there. And then look at the overall chart rest of the day there. You get that big dip down there to the 970 area. And then it goes up here again, up to the 1077. So just running the stops there, then pulling higher. Same thing kind of did earlier, crash down. Looking at a stock, you're kind of getting an idea, okay, where are people going to have their stop losses at? Where are people going to look to cover if they are short? Where can I play this chart, thinking where other traders are trading? So everyone's looking at the same chart. Everyone's looking at the EMAs. They're looking at the VWAP. They're looking at all these different indicators. They're looking at the support areas, the human factor there. I'm playing the different averages, the indicators, but at the same time, I'm thinking, where are the other traders trading this at? Are people buying this on the dip here? They keep buying there along that 1020 support there. So everyone's buying right here. It's bouncing there at 1020. So I'm thinking, okay, there's a lot of buyers there. If this does break through 1020, get a nice sell-off there. So I'm watching that 1020 area. Got kind of a double top there. People are kind of getting scared at this 1049 area, 1050 area. 1050 is going to be obvious resistance because it's mental there, but also just people are seeing that double top area. They're going to sell for profit. If they got in here at 1020, they're selling for profit. You have the shorts that are sitting there selling as well, so it's crashing down there, not getting through resistance. So that's one of the reasons that the support resistance lines work, because it has the human factor. People are buying there at the support. People are selling there at the resistance because they're worried that this is not going to go higher. It's going to get stuck there at resistance. And that's why a lot of shorts sit there and sell into those resistance areas, because they know that if it can't break above there, it's going to go lower. It's going to go back to that support area. If this resistance area does break, you got a double top there. So the shorts that are short there at 1049, if this breaks there at 1050, I'm expecting a big move up, which happened here. You can see the squeeze. It breaks through that 1050 area, jumps up there to 1095. So there you go. That's the human factor, guys. It breaks through that resistance there at 1050, squeezes up here at 1095, gets stuck there after hours doing a little bit. But you get the idea. You get those shorts that are sitting here shorting this 1049. They're like, this is gonna triple top there. It's gonna crash down, maybe go through support there, and then boom, get this big squeeze back up there at $11. Really, that's what it comes down to, the human factor, trading these support resistance areas, trading these different indicators on the chart. Where are the buyers are going to be at? Where are the sellers going to be at? And how do I play that? If I'm short, I'm looking to go short here with the idea that there's going to be a lot of people selling at this break support there. There's going to be a lot of people that are getting stopped out because they might have put their stop loss there at 1020 because they see that stop loss. They see that support there. They're like, okay, I'm going to put my stop there at the 1020 area. If that breaks, I'm going to get out of this because I don't think there's any more support there. So that's why you get that break at 1020 and it crashes down because you have all the stop losses getting hit. You have people trying to get out there, people trying to sell into that crack. So that's really why these support and these resistance areas, once they break, you get those little pops, you get those little drops. So get a good idea here. And the same thing earlier, you know, got above this resistance, squeezed up, pulled back, bounced support area, went to back up there, and then crashed. Once it broke through that support there, you can see it pulled back down here to 1020. So the human factor, it's a game. There's always somebody buying, there's always somebody selling, and you got to look at that. Look at the chart, thinking where people might be buying, where people might be selling, and thinking, if I'm a short, I'm probably going to cover above this 1049 area. Got the double top there. It's going to cause a short squeeze, and I'm going to get in there for that human factor there. And the same idea, those stop losses, you got all these different things you're looking at the chart. But remember, everyone's looking at the same charts. Everyone's watching all the kind of the same indicators and kind of trading off of that. So that's one of the reasons that these support resistance areas work so well, because people really just trade off of that. And that's one of the big things to watch for, thinking about the human factor. When you're trading, it's not just that you're fighting the computers, or you're not just fighting what else is going on out there. You also, I mean, obviously there's computers trading everything. They're bouncing the same thing, kind of watching those support resistance areas. The computers are trading it fast there, the high frequency traders, but there still is human factor in the stock market.